All right, let's do it. Everything looking good. Let's get rolling. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 8 p.m. on October 12th, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's get it rolling here. So we did see a little bit of movement in the markets today. Some important things happen. We got our producer price index. We got CPI coming tomorrow. And I know the market is patiently awaiting. We know the PPI did come in a little hot. CPI probably comes in a little hot as well. We'll see. I think the last CPI, we got a big break from energy kind of coming down. And we'll see how it's reflected. We will see. It's tough to anticipate how the market will react. It's tough to anticipate what will happen. But I don't think it's going to be some life-changing event. I mean, we would have to get a really good number or a really bad number for it to make a difference, in my opinion. So, all right. So let's take a look at what we got going on here, though. Got a couple of requests. Got a couple specifically I want to look at. And then, as always, we'll take a look at TNX, DXY, oil, all the major indices, a couple important sectors, cryptos, and some other juicy stuff too. Some commodities, some requests. So TNX, not really doing much right here. Basically came up and, as of now, tested the top of the range. It's still just hanging out there. We did put in a bearish engulfing candle technically today. Well, I guess not quite. But, I mean, that's not great. You don't want to see it start closing below the previous candle. Not really riskier, though, in my opinion, the same way there normally would be. Because basically we have a peak, then we have a lower peak. It looks like it's rolling over a little bit. We have the stochastics trending down. We could get rejected here, roll back over, and they could continue to trend down. But the fact of the matter is, the actual yield is not really going anywhere. It's basically hanging out. This is a bullish reset. This is textbook. If we go over to U.S. oil, exactly what we said happened. We had the descending channel. We broke out of the channel. We backtested the 200 exponential. There's obviously always potential for the 200 simple. Still, if we put in a higher low right here, come up, we take out this previous swing high right here, hit our heads on the 200 simple, consolidate, start finding support on the 200 exponential, there's definitely a road to oil continuing higher. Right now, it looks like we broke down below major moving averages. We backtested the 200 exponential. We got a clear rejection. And now we're going to see what's stronger. The 8 and the 21 down here, currently currently the 21 is acting as support. Everything else is acting as resistance. So, what's going to win the fight? Well, we'll see. If the 21 holds up right here, we probably test the 200 simple somewhere around 98, $100. Doesn't seem crazy. If not, if we get rejected and come back down here, we're going to sweep the lows again. And then it's all about, do we put in a lower low? The fact of the matter is, we're in the bullish control zone. And it's selling back off here. So, could go either way. But you guys know, long term, I'm very bullish on energy right now. It's not looking bullish. If anything, it could look bullish shortly. But it needs to reclaim those 200s and start at least consolidating above support. So, Dow Jones Industrial Average back here at the lows, slightly off the lows. So, we did not technically put in a new low today. But we could not get back above the 8. We got rejected once again. We're hanging out at the lows. That's never a good sign. Likely getting ready to go lower. The stochastics are trending up. We have more greens than red histograms as of late. And here we are at the lows. So it seems more like we're likely to put in new lows than start like retesting 200s since we just did that. SPY is next. So SPY did put in new lows today. Closed at the lows today. That is obviously not a good sign. 0 days without new lows for the SPY. Same situation, a couple green histograms. Now we're seeing a bunch of reds. Here we got the hard buy. We left the bullish control zone. Stokes are still kind of moving up, but we're putting in new lows. That's never a good sign. If we're putting in lows when the, indicator oscillators are putting in bullish prints, that's not good because once they start putting in bearish prints, we're really going to be putting in new lows. Triple Qs, NASDAQ, a little tech, new lows. terrible. We did come down here to the blue box area, the potential buy zone, the 0.5 Fibonacci, very important level, obviously. So we would expect some kind of bounce from around this level. Now, it's very important. What we're looking for this next bounce, or this potential bounce, we're looking for a bunch of different assets, different asset classes, stocks, cryptos, all kinds of different stuff, just all being at or around support around the same time, or at or around resistance around the same time. And then we can look for these potential pivots for some scalp plays. Right now, we don't want to just buy one thing when it hits support, because there is a high likelihood if the market continues momentum to the downside, that one thing, even if it's at support, will just bust through it. So what we'll look for is this comes down here to support and just kind of starts hanging out here. Then maybe we could start carving out a bottom as we start seeing some strength in other assets. Right now, we're putting in new lows, so I'm not trying to buy the lowest low we've put in years. You're like, but it could be the bottom. But I mean, everybody that's thought they picked the bottom for the last 10 months has been wrong. So congratulations, new lows. Everybody's a loser. Step right up, folks. It's Loserville. IWM, Russell, again at the lows. Didn't quite put in new lows, but looking very brutal. We're seeing strength on the stochastics moving to the upside as price action tests the lows. A couple red histograms, but look, the trap door is set. It really just feels like a matter of time. And it probably feels like an eternity when you're standing up there with that rope around your neck, just waiting to meet the Grim Reaper. And I feel like that's what the stock market feels like. It's just creeping. It's like a day goes by, a week goes by, a month goes by, and it's like you can feel the tension building. And then all of a sudden, boop, and it's over. Maybe not over, but you know what I mean. It's over for the Nasdaq, or for the Russell. We know that. So XLE energy. So right now it's starting to look like it's putting in a lower high. We have to wait and see. The pattern technically is like neutral with a slight bullish, favor. So all right, let me clean this up a little bit so it's a little more pleasant on your ocular cavities. All right, that's it. That's all I'm doing. Sorry. So basically, we have a resistance here in blue. We have a support here in white. And we're just forming this sort of wedge. And which way is the wedge going to break? Technically, a triangle, symmetrical-ish triangle favors the direction of the trend, which was up. And we're still technically above the 200 exponential and simple. So technically, favors to the upside right now. I don't think it's crazy that we could see energy break out here. It could definitely still have some further upside. This is the key area to watch, the 886 and that previous peak. And then obviously the highs. And then same thing, we're at resistance right now. So would I be surprised if this just rolls back over and comes all the way back down to support? And it just continues to put in lower highs and higher lows at the same time and just fill out this pattern? I mean, that's what I'm expecting to happen. My base case is just always the just easiest scenario. Sometimes we get complicated and we talk about crazy stuff and all that, but the truth is, my base case is always just the simplest shit. So, we probably come down here to support, then we probably bounce back to resistance, then we probably come to support, and then at some point in time, we're going to break down or we're going to break out. Favors to the upside right now. So, we are inside the bullish control zone. We have a bunch of green histograms. We're back on top of the slope line. It is blue. We're above the 0 line. We're above the 8. We're above the 21. We're above both 200s. I mean, this probably puts in new cycle highs. This is, if we consolidate here, this is possibly or likely the breakout. We are the majority of the way through the pattern, but it could easily go on for, a few more weeks. We'll see. The next couple of days will be crucial for XLE. What about XLU? Things are getting crazy. It's getting crazy. So we talked about the scenario. We broke down through key support that's been going on for, whatever, like a decade or some shit. Nothing. It's not like a big deal or anything. We've just been in this channel the entire time. And we've only fallen out of the channel once, really. And that was the Rona dump. And now here we are, getting our dumpity dump on. That is not good. This is not good. Why is utilities getting crushed right now? Lots of reasons. I guess people are safe. They don't need any safety stuff. We're not going into recession. It's confirmed. The Biden administration confirmed no recession. Janet Yellen came out. She said the economy is doing great. U.S. is in great shape. Tony the Tiger, great. Great. So nobody worry about it. Yeah. So it's okay. It's all good. It's all clear, guys. Lever back up. Everything's going to go right back to normal. So we're basically at our little blue box right here. You know, that was our 382. You know, we bust through the 236 pretty hard. We hit the support, and then we broke down from the support. Is it crazy to think we back tested? I don't think it is. But at the same time, you know, we did get a little back test right here and then a capitulation event. At the same time, I wouldn't be counting on a back test. I mean, this is, honestly, this is behaving a little strange. I don't know why there's so much weakness in utilities lately. I really don't. But, I mean, it is what it is. Let's not, you know, figure out why. Let's figure out what it means. And what it means is, you know, this thing is falling out of bed. And the measure move, you know, is basically the top of the channel to the bottom of the channel. So, you know, is it going to get nasty? Are utilities about to make it nasty? I mean, maybe. That's a deep dive. Really, though, I mean, we should be watching, honestly, the 618 or the 0.5 potentially. It's obviously possible we come down here and put in another one of these. But again, this was triggered by a pretty serious event, obviously, or series of events. This little sell-off, this little dump right here. Utilities are like doing the same thing, but arguably, I don't know. I don't want to say for no reason, because obviously there is a reason it's happening, but I'm not sure why utilities are so weak right now. You know, honestly, the easiest is probably the most likely. So the truth is, the trapdoor fell out on utilities, and it hasn't fallen out on the other stuff yet. But, you know, maybe utilities are just showing their ass first, and the rest is yet to come, or the best is yet to come, depending on how you look at it. XLP, consumer staples, actually found some support from our green box down here. So we did make it to the area of interest. Perfect touch of the 382. We have the pre-Rona highs right here, the thick yellow line right there. So somewhere around this area was the area of interest, the bottom of this channel right here. It got a quick little bounce. It got an attempt. But let's keep in mind, a couple days ago, it put in new lows. And also, you know, it likely we hit a key fib level, and there's a reaction bounce off of it. I think realistically, is consumer staples just going to do great? Like as all these earnings come in, which obviously, you know, we're expecting earnings compression or recession or multiple compression, etc. I mean, the truth is, this is probably just a reaction rally. And we likely go down here. This is a key level. We're probably going to 65. But we'll look for some support here. It did put in a little bit of bullish divergence here at the bottom at like a triple support area. So we keep an eye on this one. You know, the truth is, though, let's just say it was bottoming and about to go to the upside. What are we looking for? 5% to 10%? I mean, 10% wouldn't be bad. I wouldn't be mad for a quick, well, realistically, 9%. It's important, too, that we pay attention to where each of these things, especially these sectors, are in their life cycle. You know, consumer staples had a massive bull run this whole time, and it's held up very well. I mean, it put in a lower low here and a lower high, but it only just lost the 200 exponential and simple, really. And then this was our first leg down. So typically what we'll see, and it doesn't have to happen, but typically what we'll see is the reversion of the mean. Now, you could say, oh, well, we got a reversion of the mean right here. No, this is the market deciding what it's going to do and trying to push back up. And then the weakness is the first lower high. So then we come back down and see, can we put in a higher low? And then when we put in the lower low, that's the confirmation of the bear market. We usually put in that lower low and then eventually have a test back up to those moving averages, where instead of busting through them like this, showing strength, we'll actually come right up and just get rejected at them or slightly lower, like what happened with Bitcoin and many, many cryptos. So the truth is, you know, what we're looking for is probably something up to like 72. So we're talking about like 7%, something like that, roughly. And realistically, for 7%, probably not worth it. Now, if it comes down here, and then we get a bounce up here, you know, then we're talking about 10, 11, 12, you know, potentially 14% to the top of the range. A lot more potential there. Here, I don't like it. There, maybe we will. We'll see what the risk reward looks like. You know, if we get down to that level, it's not going to be, you know, if we violate those pre-Rona peaks right here, we violate this yellow support pre-Rona high, we violate the bottom of this channel right here, it's not going to look good. So we can, if it gets down to those levels, we could run a pretty tight stop loss. If the opportunity presents itself, you know, we then could be talking about that roughly 10% move. So you could run a tight stop loss, 2% on a daily close with 10% upside, and you're talking 5-to-1 risk reward ratio. It's not crazy. And realistically, that's a back test of the 236, of this key yellow support right here, of the 200 exponential, simple, and potentially top of the channel. So very likely you would at least get rejected or stall out around that area if it plays out. But we need to go lower first. So consumer staples, XLRE, real estate, new lows. You know, obviously that's a big deal. Continuing to just put in new lows across the board. Many assets, many asset classes. Very close to the 618 now from the Rona lows. You know, and again, look at how much stronger consumer staples is. This is the pre-Rona highs right here. So, you know, we're basically back here, still above those pre-Rona lows, or highs rather, pre-Rona highs. This is all the way down, you know, into the meat. This thing is, I mean, real estate, we're talking about levels from back in 2016 on this real estate ETF. So, you know, that's a big deal. That's a big deal. It might not be the same in house prices necessarily, but, you know, a lot of times you see a blend of single family, multifamily, residential, commercial. So, you know, be careful when you hear all this talks about, oh, there's not enough houses, they'll just go up forever. I'd be careful. I'd be careful. So 618 seems likely. We'll look for some key support about $33. All right, so XSD semiconductors. So we got the head and shoulders. We broke down from the head and shoulders. You know, it played out beautifully. We obviously saw this coming way ahead of time. We've been talking about how this is just absolutely textbook. The perfect rejection of the 200 exponential and simple. You know, now we're down here threatening the lows, which already was a little sketch. Now you could argue with this, and I wouldn't disagree with you, but I would still just do whatever I want to do. But you could argue that actually the neckline should be something like this. And you wouldn't be wrong. There's definitely a possibility that the neckline should be like a descending kind of neckline. And, you know, again, you wouldn't be wrong. So technically, we're just now coming down to that support. Some people are going to draw it this way with the slanted white neckline. Some people are going to draw the horizontals right here and just say this was an anomaly. An anomaly? An anomaly. There we go. That's the one. So we'll see what happens. Doesn't look good, obviously. I mean, we don't need this anymore since we're about to threaten those lows right now. So that can go. So yeah, that's the area to watch, honestly. Technically, we've already broken down as far as I'm concerned, but I could see support at about 139. At that point in time, though, you know, what are we going to do? Probably come down to 131, 132. And then, you know, we got to wait to fall if it decides it wants to do it. But, you know, semiconductors, one of the big four players, you know, the four horsemen. And we know, you know, whenever semiconductors topping out, we know what that means for the overall economy and, you know, recessions, etc. And, you know, this looks like a nasty trend potentially coming to an end. When we start talking about, you know, over 10 plus year trends, it's a big deal. It's a BFD. All right. What's going on, Will? Good to see you. What's CPI going to be, in your opinion? Man. I don't know. I'm sort of up in the air on this one. I feel like this is the hardest one to kind of predict. I don't know. What it was previously 8.3 and the forecast is 8.1. So I think that's probably a pretty safe bet. But it depends how, there's a couple variables, you know, that really could be reflected in this that's hard to anticipate. So, Previous was 8.3. Do I think it's going to come down? I do think it's going to come down a little bit. I'm not saying we necessarily peaked, but I do think it's going to come down. I think 8.1 is probably spot on, honestly. And if it's 8.5, it wouldn't surprise me either. So I think really, like, give or take, you know, give or take like that 8.1 to 8.5 range, I don't think it's a big deal either way. Like, you know, we'll rally if it's a little lower, or, you know, pump if it's a little lower. God knows, the market's upside down. It doesn't know what the hell's going on. But theoretically, if it comes in a little lower, if it comes in around expectations, I think we'll probably see some kind of like rally, a little reaction pump, whatever. If it comes in hot, you know, that 8.5 area, or even really 8.3 again, 8.4, 8.5, it's probably going to be bad, but I don't think it's going to be crazy. Now, if we miss that level, it could get nuts. I mean, if we come in the sevens, it could get wild. We could see a big, you know, pump, decent rally, honestly. If it comes in like, you know, above 8.5, ooh, I mean, it could be nasty. So we'll see, but I think it'll come right in that range. I think my guess will be right around the forecast, about 8.1. I'll go with the 8.1. I think that's a legitimate possibility. And then again, we won't be surprised if it comes in at 8.3 or 8.5, but any more in either direction, and I will definitely be. So DXY is next, but I'm not really about the predictions as much as like actual statistics and, you know, measurable things. And the truth is, I don't have enough data for that. So DXY saw a little bit of weakness up here at the top, but it's still above all moving averages. You know, it's literally at the cycle high, basically. I don't see any weakness here. Stochs are starting to turn up. I could see this getting rejected and rolling over and letting the markets rally a little bit. We'll see. We're still above the blue slope line. You know, that's one red histogram. Again, we're at the highs. We have a clear resistance at this level. So, you know, realistically, the main thing to pay attention to is our ascending support that's been going on forever. You know, obviously taking out this low would be a big deal. Taking out the high would be a big deal. But in the meantime, I think we just kind of chop right here. We're at resistance with an ascending support. So, you know, we should eventually see a bullish breakout, but it doesn't mean we don't just kind of bounce around in here. And if we do see some weakness in the dollar and it retests these lows right here, again, that could be a nice rally in the markets. It's going to be tough, though. We got earnings and everything going on. I mean, there's a lot of reasons that this market might be in trouble or reflect how in trouble it actually is. So Tesla back down here, retesting the lows. It is at that 236 once again. Again, congrats to anybody that took the Tesla short. Absolutely killing it. You know, what are you guys at? Like 27, 28%? Yeah, it should have probably squeezed a little bit of the apple in there, but, you know, it's important to recognize when you make a mistake. So, and if you don't know what I'm talking about, watch last stream. So Tesla on the daily, at key support levels, it has tested this support level quite a bit. We have another 236 slightly lower, which is the target for the trade setup. About like 180. Seems likely we're headed that way. As long as this is holding up as support, though, we don't want to get overly bearish because it is a strong support and it is holding for now. So lots of stuff getting down here to support levels. Again, I don't want to be that guy because I know I'm always bearish when everybody else is bullish, and then I'm always bullish when everybody else is bearish. But I'm also right most of the time too, like a lot of the time, like way more than the other people. So. A lot of this stuff is looking like it's ready for support again. We'll see, though. You know, again, seeing a couple trap doors makes you think twice because the risk really is to the downside. I mean, yeah, I don't know what I'm talking about. There's definitely nothing to get bullish about. These markets look like shit. Microsoft on the daily lost to 382, clear rejection, headed lower. 0.5 is a target. We've almost completed the measure move of the head and shoulders pattern. 216 is the target. And then after that, you know, we probably just backtest the 382. So is there a scalp from 216 to 242? Quick little 10%? Yeah, there probably is. We got to see what it looks like when it gets here, but that's a strong support. Keeping on with our magma, we got Apple next. So obviously, you know, headed down to the second target now. We took some profits off the table at the first trade setup. Should have moved them into Tesla, but didn't. It is what it is. And now here we go. 236 is right below us. We got that yellow support from the pre-Rona highs. But, you know, if we lose this, we still got some support about 129. But realistically, you know, the target is down here. It's 115. You guys know it. You love it. We'll see. We'll see what happens, how long it takes to get there. But it looks like it's coming. And then we got Google, a little alphabet. Alphabetting on this thing to the downside. Am I right? What a piece of shit. 0.5 looking likely now. Losing the 382, retesting the lows. Looking like that 87. $87 holla. Ooh, Google. Look like shit. Doing that walk of shame that next morning. Jesus. Yeah, Google. I mean, it looks like it's going to 87. It's going to have to do a reverse split. Meta is next. Meta again with the race to zero. Another lower low. Congratulations. Marky Mark. The Fuckerberg. I mean, we're at support. There's just a big fat cluster of support right here. We have the 382 at like 118. We have the previous low. And this isn't even the Rona lows. Keep in mind, this is 2018 lows. I mean, we're lower lows. I mean, this has got to be one of the worst performing pieces of shit. Jesus. Can you imagine being someone that's like, I'm going to invest in Meta. It's the future. Look at this piece of shit. Jesus. Never bet on lizard people. Am I right? I can't trust them. That's a joke, by the way. I don't believe Mark Zuckerberg is a lizard. Wink, wink. But seriously, I don't. But also, if he was, would I be shocked? Yeah, I would, because there's no lizard people. But if there were, he's top of the list. The guy with all the tattoos, though, that kind of looks like a lizard with the forked tongue and everything. I don't know if you guys have seen him. He's slightly higher than Mark, but they're close. All right, so on to the next. We've got the Amazon holding up. I mean, it's holding up. Don't get me wrong, it's still shitty. It's definitely very bearish, but holding up at that 618. It's probably going to break. These markets look like they're just ready to go. I mean, the momentum is like to the upside, and then it doesn't go anywhere, and then it just is like, I'll meet you at the lows. You're like, the lowest low? And you're like, not yet. Soon, though. Yeah, everything looks like trash. Man, it's crazy. It is crazy. You know, a lot different than it was about a year ago. Am I right? Bitcoin on the daily, just hanging around at the lows. Again, trapdoor engaged. So we do need to pay attention here. We did get the hard sell signal. We are back above the slope line, and the slope has flipped blue. That is bullish. That's bullish. And then the following is also bullish. Long, awkward pause. And that's it. Okay, so now that we went through the bullish case for Bitcoin, the bear case is just literally everything else. We're below the 200s. They got a negative slope. The 8 and 21 are bear cross to the downside. Bunch of red histograms. At least we're above the slope line and it's blue. Hey, am I right? Hard sell signal. I mean, Bitcoin looks like it's setting up for that droppity drop. We're going to retest these lows. I'll see you at 17.6. We'll see what happens when we get there. It won't be long, though. Won't be long. Ethereum on the daily, you know, it's looking like that Amazon. It's looking shitty, but not as shitty as everything else. So still holding up above 1225. As long as we're above 1225, you know, that's the floor for now. But if that breaks, we're coming straight back down to the channel. You know, this was our little channel breakout that we were playing the up down on. You know, the second that 125 or 12, Jesus, 1,225 level breaks. $1,000. See you at the 1K. Green histograms above the slope line. It's not blue yet, but showing some signs of life. And then on to the bearish case, just all the same, everything else. So the bull case, not good for crypto right now. Total weekly market cap. Keep in mind, we're on the weekly now, not the daily like the rest of the charts. We are below the 200 exponential, negative slope. We are below the 200 simple, still has a positive slope. That is a good sign for now. 8 and 21 are still bear crossed. We're below the 21. We're below the 8. As long as we are below all of our moving averages, it looks like trash. Crypto market cap looks ready for capitulation. Now, there is a possibility that we get a bounce back to retest 1 trillion, 1.05 trillion to be exact. And that would be the 200 exponential, also the 21. That's not what I'm expecting. Bunch of green histograms. This is like bullish momentum building as we just go sideways at support. So what's about to happen? I mean, this to me, again, not to just repeat myself over and over again, but it looks like a bearish reset. It looks like basically the indicator oscillators cooled off, price action went sideways, and now the bears are just waiting to just tear the bulls to pieces whenever they're ready. It's like that weird horror movie when there's nothing technically bad going on, but you can just feel it, like something's about to go down. That weird, like, kind of anxiety, that excitement, but not in a good way. You know what I mean? Well, depending how it rolls. Bitcoin dominance on the weekly. This is the everything dominance, starting to show a little bit of strength. Hard buy signal coming out of the bearish control zone. We do have blue slope. We're back above the slope, fighting to reclaim it right around that level. A couple green histograms. We're at the 0. If this thing gains any further momentum, it'll get back above the 21, and then pretty much everything will start to look bullish, with the exception of the 200s. So it looks like Bitcoin is getting ready to take market cap from the other cryptos. And then when we use Bitcoin dominance less our stable coins, so the stable coins are not included, it's just Bitcoin versus all of the shit coins. And that includes Ethereum, just in case anyone was curious if Ethereum is a shitcoin or not. Yes, all cryptos, shitcoins. There's Bitcoin, there's shitcoins, and they're all trash right now. They all look like trash. There's a couple good ones, but 99%. So this is showing a little more strength. So it's telling us that, hey, when we exclude the stable coins, which people are using to speculate on dollars and also, gain interest or just de-risk, etc. When we take those out of the picture, Bitcoin is strengthening compared to alts. So slowly but surely, the alts are starting to bleed out value, and Bitcoin is, it's not bleeding as fast. Imagine if you, what's a good example? You have two assets, okay, and you shoot one of them, and it's like bleeding out really fast, and then you just stab the other one in the hip. And it's it's bleeding pretty bad, but it's not going to die as fast as the one that you shot in the neck or whatever, So Bitcoin has been, basically stabbed in the buttocks, and the rest of the crypto market has been shot in the throat. So yeah, it looks great. Looking good. Looks like Bitcoin's about to take some market cap. So either Bitcoin's about to surge to the upside and the altcoins are not going to do nearly as much, or Bitcoin is ready to dump and the altcoins are going to see some capitulation. Man, the trap door is fucking set. If I have ever seen it in my life, even when stuff starts to look kind of good, I cannot tell you how this lingering feeling that we're getting ready for, depending on the asset class, a 20 to 50% down move. Very, very quickly. Please protect yourselves right now. Please be very, very careful in these markets. So gold had a nice little bounce off those new lows, came back up, had a pretty hard rejection, and then reverted to that same support line. So we tried to reclaim it. We did. We tried to hold it as support, and it failed. Now we're back testing it. If we get rejected again, we're going to sweep those lows again. We're going to retest the lows. I expect 15.95. We're going to see a 15 handle on gold price real soon. If, the momentum is looking like it's ready to roll over too. Yeah, gold is in rough shape. Longer time frames look bad. Silver had the breakout of the descending channel, underperformed, back tested at 200 exponential. Not crazy that we didn't get to 200 simple. It's back down here though, retesting what was our descending resistance as support. If this support holds, we could easily see the follow through the remainder of the move, and $22, $23 silver potentially probably tops out closer to 21, 22. 21 or 22, I should say. But we'll see if this holds. If not, just lower lows. We have a little ascending support right here. I like this. It's looking okay for now. It's still, silver is still total garbage for sure. So if you just are tired of it and it's just annoying you all the time, just mail it to me. I'll hold on to it for you. It'll be my silver and we'll keep it at my place. But, well, yeah, that's it. There's nothing else to it. So if you get tired of storing your garbage silver, send it my way. I will accept gold too, but I mean, let's not be crazy. So yeah, we'll see what happens. I mean, this is it. We got the cross of the support. We've got the cross of the resistance that we're trying to flip into support. This is, D-Day right here. So, what should happen? We should find support, another higher low on the short term right here, and then push up for another higher high and, try to just keep working this little mini uptrend right here. And again, let's not get bullish on silver. It's obviously garbage and probably the worst performing asset ever, with the exception of... Nope, yep, it's the worst. It's the actual worst performing asset ever. I just double checked. By far the worst. Depending on the time frame, obviously. But yeah, clear resistance, little like kind of megaphone pattern starting to form here. Maybe we could see some, once we see a little more data, maybe we could see like a little channel. But it seems likely we find support around this level and push up. We'll see. Not going to happen if gold dumps. We're losing the slope line right here. We're testing the zero. I mean, it could let go. We'll see. Silver is not giving us nearly as clear of a picture, honestly. GSG is next. GSCI commodity index, blah, 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 blah. Another in a series of lower highs. We're trying to reclaim this level. As long as you guys know, when we're between the 200 simple and the 200 exponential, as far as I'm concerned, we're just range bound. Until, one's acting as support, one's acting as resistance. So we have to see which one wins. The 8 and 21 did bull cross, but it happened again right here, and then we just got rejected. So, blue slope line, positive momentum above the zero line in the bullish control zone. But damn, if we didn't come all the way from the bearish control zone to the bullish control zone. And where are we at? The same place. Here we were in the bearish control zone, right around like 2175. And here we're in the bullish control zone, and we're right around 2175. So the momentum came all the way from the bottom of the range to the top of the range, all the way from sub 20 to over 80. And this is where we went, right back to where we were. Again, that is a bearish reset. Everything is like fueling up for the trapdoor. Man, it's crazy. It's so wild. LNG is next, threatening the highs again. So we'll see what happens here. This is starting to look like a potential, double/triple top, depending on how you look at it. Some sort of demented, broadening wedge or head and shoulders or some bullshit. It doesn't really matter. What matters is it's trying to hang on to its momentum. If it can break out to the upside, looks good. If not, we're just going to print like another drive of bearish divergence, which seems likely. I mean, we lost the slope line. We're below it. Typically, we get rejected. Obviously, we got rejected here. Pretty big downside. If we get rejected here again, we probably come down to 200 exponential and simple. I think that's a buying opportunity if we get down here, though. That initial test, that's going to be a big deal. I mean, somewhere around 140. We're at 170 now. We're talking about a 20% drop in Cheniere Energy, a.k.a. liquefied natural gas, that LNG. That good. MOS, Mosaic Company, little fertilizer action right here. So we're obviously seeing a lot of commodity prices coming down. Fertilizer prices, obviously, as well. AKA, fertilizer companies anyway. So what does that tell us? Lower high, but not necessarily a lower low yet. If this can hold right here, we probably retest the top of the range. If not, could be in trouble pretty quick. I mean, we hit the 618 perfectly. That's a damn technical move right there. And we're losing the 200 exponential and simple again. This is our pre-Rona high right here. I mean, I'm sorry. No, that's our fib. My bad. That's the macro fib. If we lose that, the next big move is down at like $33. So, and we're at 50 right now. Talking about roughly 33% move or something like that. Less than that. It could get bad. This is the key level. We have to hold 43.37, or else it's just going to look like, okay, we break down, we try to reclaim it, we fail, we backtest it, new lows somewhere around 37 to 33, and then again we get the backtest of that previous fib level that we're at right now. We lose that as support. It's going to act as resistance when we come back to it. And that's going to line up with the backtest of the 200s as well. So again, we can see how these things, every chart is basically just the same chart, give or take 1 year's time. So many of them are like, oh, we've been in this long, amazing uptrend. And now we're threatening to go into the downtrend. Or it's like, oh, we just, came down here, put in a new low, and then we're back testing it, and that was the reversion of the mean, and now we're getting rejected. Or, oh, we already fell out of bed. Or, oh, we're meta, so we're on our way to zero. It's just wild, like, you know, everything. I mean, not everything, but 99%. So URNM. So, okay, so we're going to talk about uranium here for a second. We've been talking about somebody was lying. We had a liar in the midst, and we figured out who it was today. I mean, I'm not going to say it was insider information. We're not going to say that there was any foul play going on. But we saw some strange strength in one single uranium stock in particular, not URNM. URNM is much more in line with the rest of the markets. But looks like we basically tested the top of the range. Looks like we're getting ready to break down through potential support here. We'll retest the lows at about 55 and then likely head to our target at the 382, around 50 bucks. That'll be a buying opportunity for a scalp at some point in time, potentially, depending how low we go here. Could get as low as 45. Somewhere in between 45 and 50. We'll definitely be hunting for this thing for the next in a series of bounces. So confirmation into the bear market. Now let's talk about the culprit. So we've been talking about CCJ and how CCJ was a liar, pants on fire, because everybody else was bearish. All the other uranium stocks looking much weaker, and CCJ was just holding up. Little Cameco was holding up, the big player. Well, not today. Down like 15%, just fell right out of bed. Lost the 200s, and now it looks much more like the other ones. Now it still looks better because we're not putting in lower lows yet, but there's a reason it fell out of bed like that. Little acquisitions, whatever. Somebody was asking about why it happened. Shouldn't it be a good thing? I honestly don't know enough about the situation. Obviously, the market reacted in a bad way. If you say you're going to do something publicly and then the market sells off, obviously something about what you're doing, the market doesn't like. So I'm not sure exactly why it's good, bad, or ugly. A lot of mergers and acquisitions take place in bear markets, especially when valuations are coming way down. Maybe people don't like the idea of them not having that extra cash on their books. I'm honestly not sure. I really don't know. I look into it. You could look into it. Anybody could look into it. I'm sure there is a valid reason the market didn't like it. But again, I don't know exactly. But the fact of the matter is, we saw a divergence. Okay, we had a little disturbance in the force in the uranium space. And again, we see everybody saying one thing and then somebody's telling us different. And it's either everybody's lying or just that one person. And in this case, that person is CCJ. And it was, in fact, the liar. So we found it. So we'll see what happens here. We got support right here. We lost the support. We lost the 200 exponential. We lost the 200 simple. We came down below that 236 of the back test. What do? We went down from 29 to 22. That was where we took profits right here. So what do? Do we buy back in right now? Do we wait for it to go lower? Looks like it's going to try to come down here and sweep the lows. We could easily get a push back up here. We could see a nice 10% backtest move. But right now, the fact that we lost this ascending support that has been holding up since our low back here in August last year, not good. We know what this is. We have this strong blue support. You kind of can't see it because of the moving averages, probably because they're all blue and it's just a whole big cluster. But that's like our ascending support. And then we see here the slope starts to decline. Here we have a nice strong slope going to the upside. Here now we have this green support and the slope is just less intense. And now the next thing we're looking for is this yellow line right here. And we see the slope is even less intense now. Matter of fact, depending on where you go from, you could argue that this is our low. That's our next little cluster of lows. And that's what we held on to, is that one. So if we lose this one, we threaten the lows right here. And then it's basically just a flat slope line. And then we know if the slope was intense this whole way up, and then it was a little less intense, and then it was even more less intense, and then eventually it's just flat. And then, what is that? It's the parabola. Parabola. What a good word. Parabola. It's fun to say. I want you to say it. Say it maybe in your head, though, if there's people around, because it could get weird. Well, probably not, because if they can hear you, they can hear me. So they'll know why you're saying parabola. All right, almost done, guys. Couple left here. So we got Tilray next. Looking at the pot stocks, just hanging out at the lows. Still terrible. We have this clear what was support. People were wanting this to be the bottom so bad, and now that's resistance. Doesn't look good to me. We are at the bottom of the range. You know, these things have gone essentially the majority of the way to zero. So, you know, is there an amazing buying opportunity on Tilray right now? Depends what your time frame is. You know, I don't think Tilray is going to go out of business. It's probably still around in 5 to 10 years, and it's probably way, way higher than it is right now. But if it goes from $3 to $1.50, you're going to be kicking yourself. But, you know, obviously it's not about timing the market. It's all about time in the market. That's, I'm obviously joking, because all the retards that said that were in like profitless tech or even just indexes and are down like 20% to like 50%. And they're like, oh, time in the market. I'm like, really? You wouldn't have dodged 20 to 70% downside if you could have? Yeah, right. Get out of here, you fucks. You're just too lazy to learn how. Not you guys, but. So, yeah, these earnings suck. So, estimate was a loss of 6.7 cents per share. Reported was 13, so double, 100%. Congratulations, Tilray. And then the revenue was pretty much, I mean, it was off by 1.7%. It was estimate 155 million. Came in at 153. So not crazy. But man, you know, it pumped into earnings because of that Biden tweet or whatever. That's so fucking sus. Why is Biden on his account tweeting on like the, you know, presidential account or whatever, tweeting about cannabis the day before Tilray reports earnings? That's so fucking sus. And you know it wasn't Biden. I mean, not because he's a meat puppet, you know, with no life left in him. But because, you know, he's not on Twitter. He's not Trump. So, yeah, super fucking sus right here. Super sus. Somebody from the Biden administration who runs his Twitter account may or may not be an investor in Tilray. I'm just saying. LBS1, lumber. You know, it's trying to put in a bottom here. It is a lower low. Not good. But, I mean, again, pretty beat down. Is this just a back test of the breakdown, though, or are we actually reclaiming support? We kind of have to wait and see. It could go either way. We don't need this anymore since we put in the new low. You know, and this was that level we were expecting to hold, and it did. So what does that mean? You know, arguably, this was obviously a little bit hypothetical. That's not the one I want. Little fuckers. Oh my gosh, are you kidding me right now? TradingView. You know what I'm trying to do right now. Don't fuck with me. There we go. So, you know, assuming that's going to be the low, you know, which it was like, assume that's going to be the low, assume that's going to be, I mean, you just keep assuming it's the lower low until crazy stuff happens. I mean, again, you want to just assume that's the low? Did we already break down from it and now we're just back testing it? I don't know. I'm going to leave mine how I had it. I wouldn't get mad at you for doing it the other way. It looks like we're trying to reclaim that support. Chop around here for a bit, see what happens. If we start to pick up momentum, there's definitely a sign here. There's a bunch of bullish divergence through here. It's not crazy to think that lumber is literally getting ready to come back up to like 900, somewhere around there, the top of the range. I mean, I honestly, you guys know what I do. I buy support, I sell resistance. We've been trading in this range. It's pretty clear. It's pretty definable. We're at the bottom of the range, probably going to the top. You know, 100% move. I mean, it's basically a dubski, a hundo percentage. You know, if you want to beat inflation, invest in some solid wood. A little mahogany, some oak, depending on, you know, if you have any like personal scent interests. Yeah, something like that. It's not quite the even 100. It's not even worth it. It's only 99.96%. I mean, we could doctor it. This is the internet. You guys want to juice it up a little bit? We will. We'll do it. We'll juice it up. Oh, we did it. 101. That's fine. Let's leave it there. So, I mean, that's it. 101% upside potential. You know, about a Dalmatian's worth. Downside risk, about 17%. It's like 5-to-1 risk-reward ratio. It is technically bearish, but we know we want at least a 3-to-1. So, yeah, I mean, you know, if we put in a new lower low, obviously wasn't the bottom. We keep going lower, you know, and obviously this, Yeah, obviously target would just be backtest. It could definitely underperform. Definitely could underperform. But I mean, realistically, let's be real. Oh, it only went up 50%. It underperformed. Oh, what a garbage trade. Or it just straight falls out of bed. We'll see. It hard to believe Wood's going to go that much lower suddenly. Over time, I think it could grind lower for a long time. That's possible. But I mean, when we look back at this chart right here, there's so much support like through this range in here. It seems like we'll test back up a little bit first. This is probably going to act as a big resistance, like 622. So if we were going to buy at 500 expecting to go to 622, that's obviously like 1-to-1 risk reward ratio with that same stop loss. Not nearly as appealing. But there's a bunch of bullish divergence. Yeah, I think this one's legit. This one looks good. Could watch it for a couple days, see what happens, but I think that looks good. Lumber, it's giving me a little semi right now. A little chubber. PFIX is next. A little member request action right now. Just a way to basically speculate on the rising interest rates. We have a technical breakout. Blue sky breakout. Now, there's not a ton of history on this, obviously. And we know, rates are basically breaking out. So, no big surprises. We won't have the same resistance to look out for, but, we know where the real resistance is. And, we know when this is going to move, obviously. But as far as I'm concerned, blue sky breakout looks good. Looks like it's getting ready to head back into the bullish control zone. I mean, we left the bullish control zone, came down and cooled off for a little bit. Got the hard buy again, and now it's attempting to push back into the bullish control zone. And the whole time, all it did was take out the double top, aka, resistance, and then just crept up. So it creeps up while the indicator oscillator is going down. It looks like it's just fueling up the ship. Okay, it's in like the atmosphere, and one of those little crazy ships comes up, and it like lets this little hose out the back, and then you line up the little hose with the little hole, and then you suck up that fuel, and then you're all juiced up, and you're ready to, go to space with Elon. And that's what rates look like. But I mean, I know, obviously the Fed's about to pivot. Everybody knows that. And the dollar's going to zero. Don't be dumb. So yeah, blue sky breakout looks good. I wish there was more history, but I mean, we know what the history is. So ARKK. Oh no, Kathy. All right, so look, I try not to bust Kathy's lady balls too bad, okay? I pull a lot of punches, all right? She's obviously a charlatan and a brain-dead investor. That being said, she's been talking about how the ARK stocks and all her garbage trash bottomed back in May. It bottomed back in May, and it hasn't put in a new low since, and all this like fucking bullshit. Gotta listen to her stupid fucking mouth. I actually like listening to her bullshit, though. And I honestly believe that her team does do a lot of research, and some of it's good. But the problem is, there's a difference between being right eventually and trading. And she's trying to day trade with a 5-year time horizon, and she obviously sucks at it. She's garbage. So that being said, ARK just put in a new low. So her whole narrative about how, and I don't know if anybody saw recently about her crying to the Fed about how this was just too much. It's too much. Oh, it hurts. Help me. Stop it. Fucking trash. But anyway, that was her desperately trying to defend her ARK stocks because she knew we were threatening the lows. And if we went to a lower low, her whole narrative is garbage. And she's been pitching that same bullshit since May. So she's been pitching that bullshit since May. And now the bullshit has proven in real time that she is, in fact, an even bigger loser than we thought. And you know what? I have a feeling this won't be the biggest she ever loses. Because we're basically losing this triple bottom 618 right here. And we know the next target is a 786. So get ready, Kathy, for the bloody waterfall. It's coming. I mean, she's probably going through menopause, so I don't think she has to worry about bloody waterfalls, but the ARK is looking pretty rough right here. Okay, it's looking like it's about to go to $24.48, give or take. We'll call it $25. So see you at $25, Kathy. Congratulations on losing all the monies. You're the best. So that's it. That's all I got on the list for today. We got to dig on Kathy a little bit there at the end. You know, it's always fun watching her dumbass be wrong again in real time. Yeah, all right. Let me jump in the chat here, and then I think we're going to wrap it up there. What are we at right now? Holy shit, we did it in under an hour? Are you serious? Guys, we are on fire. Unless you want longer streams, then sorry about your luck. But I feel like people want slightly shorter ones, so. Prague says, what's happening? Good to see you, my dude. Thanks for the stream. Of course, brother. Good to see you. What's up, Bill? Good to see you as well. What's up with you, bro? From ways away there. Hopefully everybody had a good night. Hopefully you guys enjoyed the stream. Going to be some excitement tomorrow. The next few days, really the next few weeks are going to be wild. So definitely looking forward to it. Definitely looking forward. Yeah, I know Bill likes them longer. For sure, for sure. And I'm going to start doing static videos again too. And I've been busy as hell. Bunch going on. I'm sure like everybody. You're like, excuses, excuses. The truth is nobody really cares in the bear markets anyway. You can tell by the sentiment and everything. Which is probably why we'll get a new bounce soon. So we're either going to get a trapdoor or a bounce. So we'll either go up or we'll go down. Probably by a lot. So get ready. Make sure you're positioned for either of those two scenarios. Or we could get a wild card and we just go sideways for a while. So any one of those scenarios probably very, very likely. Very likely. But the truth is pretty much everything's in a bear trend, bear market, downtrend, looking like shit. So I would just assume that it's going to continue. If we do see a little bit of weakness in DXY and TNX, though, it lightens up a little bit. If we do see a decent CPI print come in, obviously the PPI, you know, has a little lag to it, but the CPI comes in decent. We could be set up for a nice little rally. So I will be ready for it. Obviously, we always stay ready, and then you don't have to get ready. You know what I'm saying? We'll have our Friday stream, 11 a.m. Eastern Standard Time. Make sure you guys check that one out. And then obviously every Sunday and Wednesday, I would do our market outlook and our midweek market update. Hey, that's today. But yeah, we'll go ahead and wrap it up there. Appreciate everybody tuning in. Hope you guys enjoyed the stream. Make sure to write something in the comments or whatever. So YouTube, I mean, I don't care. Let's be real. We'll go ahead and wrap it though. So it is 8:59 p.m. Eastern Standard Time on Wednesday, 10/12/2022. And as always, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I am a crypto trend trader, and I'm out of here. Appreciate everybody tuning in. Everybody have a great night, and I'll see you guys on the next one.